And it is 5/21, 2019. We are live here on YouTube. It is Tackle Trading's Halftime Report, a daily show where we break down the markets. We do market analysis. We look at all the different charts on the indexes and commodities and currencies, and we have some fun while we're doing it as well. Noah, how you doing today?
I am fantastic. Thrilled to be here.
Yeah, I like it when I ask the question, people just answer it honestly. I love that. Mark just gives me a hard time. He complains about pleasantries and all this kind of stuff. Man, he is something. There's no doubt about it. Great analyst and always good on the show. There's no doubt, but he does not like those pleasantries. I'll tell you. Cody, why do you think that is?
He likes to be the grump in the room.
He does. He is. And he has won that title. There's no doubt about it. But he was in a great mood yesterday. Hopefully that mood carried over to today. Shout out to Coach Mark. S&P 500 up 0.73%. 20 points on the day here, Noah. Back and forth, hanging around. Kids got alligator blood here. The S&P 500 will not break one way or the other. What's your read?
Boy, this morning has been a bit of a snooze fest for my own trading. Just inside candles, just inside consolidation. We were talking about it in the lounge. It's challenging that 9-period moving average. If Mark was here, he might have something to say about that. If we could get back up above that 9, I'd like to see it back up above the 50 if we're going to go bullish. Maybe clear the pivot. And then to the bearish side, it's got to take out yesterday's candle low to get me some action there. But it's pretty neutral. This is just right inside consolidate. It's like a triangle consolidating down.
2864 is in the middle of 2800 and 2900, and I'm pointing out the obvious there, guys. But there are some developing levels here of supply and demand that are important to me. Now, if you do break 2900, somebody might say, well, there's another resistance at 2960. Great. That could be another 2-3% run. But really, that pivot point from 4 days ago is something I'm watching, Noah. Where are your supply and demand lines right now?
Just like that, support, resistance, these are the actual absolutely definitive lines in the sand. Otherwise, I'm looking at moving averages. I'd like to see it back up above the 50 and then the 20 to really give you some clarity. Otherwise, I think it's just ping-ponging back and forth between the most recent support and resistance lines that have been created intraday.
Mm-hmm. Yeah, I would agree with that as well. I mean, if I'm looking at this S&P 500, it's just ping-ponging back and forth. And part of that is the news back and forth, Noah. Yeah, I would agree. Obviously, we saw recently that they were talking about Yahweh restrictions. Well, the Justice Department or whoever else it was, they came out today and said, listen, we're not going to restrict everything. And the U.S. eased those restrictions on Yahweh. They gave a 90-day reprieve for limited business activity with the Chinese firm. Now, that company's been in the news now for the last year or so, but it's obviously a big factor right now. It affected Apple yesterday on the negative. Now, a lot of those companies are bouncing back. We'll come back to S&P 500 companies for a minute. Give me a quick chart on FXI, and let's talk about this U.S.-China trade relationship and the trade war as well. When the news is just bouncing, Noah, how do you handle that?
Go neutral. I've neutralized the portfolio and focusing on the theta.
Mm-hmm.
And waiting for more clarity. I've still got my stock picks here and there that I'm just waiting for triggers on. I got triggered into one this morning, but I'm really light on my directional stuff, just small positions.
Mm-hmm. Let's take a look at some of these Chinese firms and talk about the impact of this trade war recently. And this is one of the reasons why Trump comes out and pounds his chest. He's saying we're winning mostly. You look at that FXI, it's much weaker than the S&P. It has been dropping precipitously for the last little bit. Quick peek at Baidu, if you will. Baidu had their earnings, a couple weeks ago, last week actually, gap down almost 20%, Noah. Just an ugly, ugly chart to the downside. Give me a quick read on that one.
That's a bloodbath, Tim. That's just like that. That's about all you can say about that. That is dropping hard. It's got a small inside candle, which you might see a dead cat bounce on that.
Mm-hmm.
That's a ton of downward momentum. That is a huge percent drop. And I wouldn't touch that with a 10-foot pole. I might consider shorting it, but I think I'm late to the party on that.
Alibaba, you might not be late to the party on, one of our favorite companies in terms of fundamentals and long-term prospects. But that chart, Noah, is breaking down on earnings as well. And this weakness here recently, starting in the early May, late April, you're seeing the trend roll over here, riding that falling 200-period moving average. One of the biggest companies out of China that's publicly traded. Give me a read on this one.
That's interesting. The gap down below the 200 creates kind of a new line in the sand. And, full disclosure, I got a position on this where I'm kind of neutral on it, but that moving average right there with that candlestick, that's retesting. And I suspect it's going to head a little bit lower, on weakness here, because you got a lot of downward momentum. The volume on that's really impressive, Tim. That's not light selling. That's heavy selling.
Mm-hmm. Yeah, for sure. Take a look at PTR, PetroChina, a $180 billion energy company, oil and gas company, and they're literally just riding the bottom of their charts. Just a low base even developing here, Noah. Break below 57.50 could be tradable.
Yeah, absolutely. I like that low base. In fact, I'm not jotting that ticker symbol down on my notepad right now. I am not thinking about planning I just saw that chart and I thought it was pretty. So
that is pretty. There's no
pretty
doubt
for
about
a bear.
it.
That is.
And one of the reasons why I want to start with China here, welcome out everybody. If you're here watching our show, that means you are #Team Tackle, your halftime crew, and you're here bright and early. And we were on time today, Noah. Usually we're a minute or two late, but we were on time. Are you proud of that fact? Is that something to hang your hat on?
As one who likes to show up fashionably late, I'm not sure about that, but punctuality is important to many people.
Oh, yeah. Yeah, my dad was a high school football coach, so you had to be 5 minutes early to be on time. I mean, that's the way it was the way we grew up. But I don't know. I'm an on-time guy most of the time. PTR here fading lower, going down the chart, bearish. That's not just the only one. S&P, China Petroleum and Chemical Company, integrated oil and gas out of China, $94 billion company, in a little bit of a bearish retracement down here as well. I think we're all getting a theme here. There's bearishness in a lot of these companies. Now, Chinese tech like JD and NTES, you could make a case for neutral, but I'm not seeing hardly anything bullish right now. Could news impact that? Absolutely. It absolutely could impact that, but either neutral or bearish across the Chinese market is what I'm seeing, Noah.
Yeah, I've been avoiding a lot of the tech stocks just because I think they are far more susceptible to the news. Mm-hmm. And the trade talks, and you look at even like Apple, gap down the other morning on the trade news. So it's been interesting on a lot of those tech stocks. So yeah, this is one of those things where I'm waiting for the next tweet to drop all the time.
Yeah, and that's the complicated part of it, but here's the thing, trade what you see and trade the themes in the market. If Chinese pressure is going to happen, it's going to affect firms that do business in China. Build a watch list of bearish stocks that you can play when those tweets hit, Noah, because some of those signals are going to be clear and ready, and preparation is the key to success. In fact, in the chat, just type in the word preparation, okay? And we're all now in a spelling contest. It's okay if we get that one wrong. I don't know if I could spell it. Spell preparation for me, Cody.
PREP. Oh, you said Cody. Sorry, I wasn't.
Did.
Nope, I'm not even going to try.
Not even going to try.
PREP period, prep.
There you go. Prep is what we're looking for. Back to the S&P 500, if you would. And so we've got some strength in S&P companies and some strength in certain sectors in the market, some strength in U.S. companies, weakness in China, weakness in other areas. That's why the market, in my opinion, is ever so subtly bullish, but somewhat neutral here if we can take a peek at that. And you talked about how the summer is for theta. The summer might just be for stock picking and trading edges that fit the current conditions. Theta definitely could fit there, Noah. Back on a weekly chart, if you would, real quick, or even an intraday, either one. Break down the multiple time frames.
Back out to the weekly here.
Yeah.
From the weekly perspective, Tim, I was talking yesterday with one of my students, just saying, hey, that's kind of a bull pullback in the weekly perspective. I can see this turning into a cup and handle. I could see it breaking out from those highs. I think it just comes down to what comes out of the trade talks. And I know that there's going to be some monetary policy talking this week, I believe.
Correct.
And nice little doji candlesticks in there. So from the weekly perspective, I still would think absolutely bullish. From the daily chart, I think the only thing I'm worried about is the fact that it got below that 50 period moving average.
Mm-hmm. Mm-hmm. Yeah, I see that as well. The weekly chart actually showing you something that you could paint a picture for, which is one of the reasons why I still think it's strong. And I'm still keeping it on the right side, the bullish side of that 50-yard line. Daily chart is moving neutral in the short term. That could improve with positive news. We're going to keep breaking down the markets one at a time. You know, as I go through the market every day, Noah, I always start with the broad indexes. I start with the S&P. I look for key performers. I look for earnings dates. I look for things that are happening from there. When you're going through, do you always go through all the indexes first before you go to individual companies, or do you kind of break it down one at a time?
Yeah, I was actually talking a little bit about this in the lounge this morning. Before I go to bed, I check the futures and I put a little line on the chart, just a price level. So when I wake up in the morning and I'm still somewhat groggy and I open up the futures, I can tell whether it went up or down overnight real quickly. Mm-hmm. Other than that, I look at the S&P and then eventually I'll get to the other indexes, but I start with that S&P, and sometimes that's all the further I go, because I figure, you know, the S&P still has a lot of the components from the other indexes in it. And if I had to choose one of the indices to measure off of, it's the S&P. And then if I'm heavy in tech or whatnot, I'll go look at the NASDAQ. And then, as I go through trade management, I almost invariably end up looking at the Russell because I've got condors and things running. Mm-hmm. So I do end up looking at them all. But oftentimes, just at an initial glance, I just hit the S&P and that's it.
Yeah. And I use a lot of different tools. Sometimes I go to the individual companies or charts and whatnot, but I always start with just a broad heat map. I do love those heat maps as well. I've become addicted to heat maps over the years. They're just so quick. A couple of earnings stocks. AZO had earnings last night. AutoZone. Or this morning, I should say. Beautiful weekly candle.
Yeah, beautiful weekly candle.
Big stock.
So weekly chart, let me get back to the daily time frame. That's a pretty good looking pop.
Pretty good pattern here. If you look at the consolidation or the retracements back in December and January when it did before it popped, the last time you had a very similar pattern to this, it actually ran for a couple of months. Now the market got real bullish in January, February, and March, but you've had almost a 6-week consolidation pullback and now running on earnings here. A very interesting chart in my opinion.
I think we got to take it intraday, Tim, because you got to look at that gapped up, filled its gap, and then ran. Mm-hmm. So that's pretty cool that it filled the gap already and has already taken out the high. And that's a very bullish signal in my book.
You know, and when a big company like that, auto parts stores, out of valuation, AZO's at 25 billion, O'Reilly's 27, and AAP is 11. I'm guessing, I bet those other two stocks actually benefited from this move as well. And they did. They're coming off lows. They're not nearly as good. AAP coming off the bottom support, couple of nice candlesticks. ORLY coming off of a breakdown. Actually, this move on AutoZone is propelling the auto parts companies here higher today. Outside of that, TJX department stores, you know, they had their earnings today. You're going to have a bunch of different department stores, brick and mortar retails through the week. Not much that came out of that one. Home Depot, though, did have earnings, and initially it wanted to fade lower. This is a really interesting candlestick, Noah. It sold off in the morning, but not a lot, not aggressively. People who understand earnings volatility realize that wasn't a huge risky candle, and now we're backfilling back into right where it closed yesterday. Give me a read on Home Depot's earnings.
Yeah, it erased the gap. It gapped down below the 200 period moving average. It's filled its gap, so it's back up above. Again, you look at that intraday, and you know you got your overnight activity run down, run back up. So that is, you know, that 200 period moving average also being kind of a support resistance neighborhood from the past. 190 seems to be a pretty significant price level. If I can see it get back up and clear the congestion in here, and maybe cross back up above that 50 and 20 moving average, I'd probably have a pretty good bullish bias on that. Mm-hmm. But it looks like they did miss the earnings by what, a penny?
They did.
They did. And so I might want to go double check the guidance and see what their forecasts look like.
Sure. Yeah, dig into it. There's no doubt about it. For me, though, it's playing a little defense here. Could be interesting as we develop. A couple of companies have earnings tonight, LB Brands, NTAPS, Copart, things like that. Tomorrow, before the market open on the S&P, you have Target, Lowe's, and Advanced Auto Parts. You're dealing with the consumer product companies, the department stores this week, brick and mortar retail like your Home Depots, your Targets, and your Lowe's. Not a lot else outside the market that does have earnings earnings this week. Let's talk about performers here today, Noah. Some of the top performers on the market: DISH making a battle back, actually backfilling after they were selling off aggressively yesterday on a downgrade. Little snapback rally, 4.5%. It would have to break the high side for a technician to get interested. I still wouldn't be myself. There's too much noise in the past. Give me a read on that chart.
Yeah, it's a lot of sideways noise. And I agree. I would not be interested in that unless it cleared and maybe even closed above that 35.70 zone.
Mm-hmm. Yeah, a lot of these chip makers are snapping back on some of this positive China news. Just take a look at Micron, for example. We've talked about Micron in the past. Very popular, very tradable company. Yesterday, the negative news on China. Today, the positive news on the Huawei and the restrictions giving a 90-day window. Down and then back up. And that's where the news can be frustrating to traders, Noah. There's no doubt about it. But you got to trade.
Doubt. Yeah, the semiconductors have been hit pretty hard with the China news. I mean, across the board. The big fish like Intel are way down, Micron down, AMD's down a little, but a lot of those chip makers are taking it on the chin.
Yeah, for sure. A lot of the healthcare stocks are showing me a lot of strength here. Look at Anthem, who I've had on my watch list and even played bearish, ANTM if you would. Bearish at different points in the past, and you'll notice a breakout here on that little consolidation. The healthcare plan companies were under so much pressure about a month and a half ago when the news had turned negative out of Capitol Hill and policymakers and the expectation. And I got to tell you, I mean, they have a dividend they're paying. They're looking like they're stable. Investors are coming in and scooping up these healthcare plan companies right now, Noah. Are we ready to move that healthcare sector into more neutral category, do you think? Give me a look at XLV, if you would.
XLV. Following suit, I'd like to see it up above those moving averages. It's, the big kind of kiss goodbye zone in that neighborhood. And I've seen this across the board. I've got positions on UNH and watching that pop up and have a lot of momentum too. Anthem looks like it's the strongest of the bunch, and I think you need a couple more days up for me to start to shift from neutral to bullish.
Sure.
But yeah, you can't deny the move. I mean, it's definitely moving.
There's no doubt about it. Some of the losers here today. Well, Kohl's gap down. I can't remember the last time I've been in a Kohl's. No judgment at all. I mean, I just don't do a lot of brick and mortar retail stuff at all. Target does online shopping now. I will go there. There's one right by my house. But these are companies that are under a lot of pressure right now, Noah. And you don't have to be an economist to know that there's more people shopping online and less people shopping in stores. That's a breakdown and a pretty nasty gap. Give me a read on this one.
That is a pretty nasty gap down. It's coming back up a little bit. I watch out for that 60 zone. If it's recovering, 60 is the old support zone. Mm-hmm. And, good. That's a pretty good gap down. That brick and mortar retailers, I think, that whole retail apocalypse and just people's behaviors have shifted. I don't think you're the only one, Tim, who doesn't go into a Kohl's anymore, or into a JCPenney or into the Macy's. I'm more likely to go Google, find stuff on Amazon. Mm-hmm. And I think that's true for a lot of people. So brick and mortar, unless it's a specialty retailer, I think they've got a, pretty tough row ahead of them. And, Kohl's this is kind of par for the course from what I think.
Yeah, I would agree with that. Move on to the Dow Jones Industrial, if you would. Let's talk about some of the blue chip companies. Nothing else catching my eye on that S&P yet. There are trades in the market that are definitely setting up. There's something you can do each and every day. On the Dow, top leader today is Apple Computer. We'll talk about that one shortly, but give me a read on this chart. I've got a neutral read on it myself.
I'm about as neutral as I could be. I'm below the 50, above the 200. I'm in a consolidation pattern. A lot of congestion in the area. Yeah. So yeah, neutral. And I think that's, a good time for those time decay type strategies.
Yeah.
Yep.
I would agree with that.
Would be good.
I would agree with that. And, you get positive news out of the trade war. What companies are going to benefit? Well, Intel, Apple, and Caterpillar are the top three gainers here today on the S&P, or on the NASDAQ, or in the Dow, I should say. Start with Intel, bouncing off the low, little 2% candle, still down from where it was on Friday. Apple Computer bouncing off the low. It doesn't change the chart pattern though here, Noah. Yeah. And this one's a complex one. I actually cut a video and put it on my Twitter and put it on my Facebook. And I asked, where do we think Apple's going to go? And I want you to go to the weekly, the daily and the hourly and just explain the technicals, okay? And I'm going to ask everybody out there, as you watch Noah break this one down, where do you believe Apple's going to move next? Up, down, sideways, or you don't know? Give me an answer in the chat once you've had an opinion. Noah, break that one down for me.
Okay, from a weekly perspective, you have a lower high, but you also are in the setup for a higher low. This is a motive wave up, a nice strong move up, and a pullback down, and that is, it's got its little support resistance zones in here. If you look back in the past, those can act as catalysts. So you got a nice little support resistance zone and a couple green candles down in there that make it look like, from a weekly perspective, the investor's perspective, they might just like that discount on Apple. Now, from a daily chart, it's below all moving averages, which is one of those no-fly zones for a lot of traders. Why would they want to go bullish on something that's below all of its moving averages? Well, it's not necessarily the swing traders, perspective that might find support there. It might just be the investors, the long-term buy and hold guys who say, oh, Apple's at a discount. And they think of the trade war as just an opportunity to get in buy some shares at cheaper price and hold them. If they buy up enough supply on that, and again, you get back down into, let me switch this one to a daily so I see my volume. The volume's been waning just a little bit, but you got some pretty high volume on that sell-off. So I'd like to see it up above the 200 period moving average before I consider going bullish on it. And maybe wait for it to get back up above that 50 and those 200. Those are going to end up kind of intersecting in a couple of days, and you'll see that if it pops up, and that kind of gives it a double bottom look. But from that weekly perspective, I like it. From the daily perspective, I'd say wait. And from an intraday perspective, I'd want to see it taking out that high right there, just above 190, to give me a book, because otherwise it's still in a downtrend.
Yeah, the answer is I don't know, because quite frankly, it's going to be so sensitive to the trade talks. I think if you're going to go bullish, though, you do need to trigger above that consolidation and those moving averages. There are bearish setups in play here as well, Noah. Oh
yeah, you could, and if you take that into consideration, I think that there's a strong case for the bears here on the daily chart, because it is making lower lows and lower highs below all those moving averages. And again, trade, if you get some tough talk on the tech stocks and some posturing and saber rattling, what have you, I think that they are the most susceptible to that negative news.
Other weak charts on the Dow, I think Caterpillar still looks ugly to me, and I love Caterpillar. I love these companies are great companies. It doesn't mean that you can't trade them to the downside. Just because you have a positive, viewpoint of a company and the way they do business, markets go up and down. You've got to take your emotions and your opinions out of it. Caterpillar now on 2 green candles, but below all moving averages and coming back in a bear retracement pattern, obviously sensitive to everything that's happening with trade and tariffs and whatnot. Give me a quick read on that chart.
For a stock like Caterpillar, when I see it, head down like that into a big support zone, I automatically start thinking about selling options. Just kind of out of the automated response there. I think it's got some slowing momentum on the downside, but it's still in a downtrend below all the moving averages, like I said. But it's got some big support here at the 120 to 110 zone. And historically speaking, you back that out and you throw that on a big weekly chart. And this is a big support zone down here below it. So I can see investors liking the idea of picking up Caterpillar on the cheap. On the foregone conclusion that they think the trade wars get, settled down, we get some agreements and business resumes as usual. And, you got Caterpillar on a discount for a lot of investors. They like that. It pays a dividend, big, strong stock. I think for Caterpillar, one of the bigger issues is the strength of the dollar.
Yeah.
Tends to affect their exports.
Yeah, I would agree with that. Move on to the NASDAQ, if you would. Let's talk tech. And I've made up my own new FANG. It includes Cisco, by the way. All the trash talk I got from Cody, I'm putting Cisco in the FANG. We're going to come up with a new name. Facebook, Apple, Amazon, Netflix, Google. I'm looking across the board. A lot of neutrality in these charts here right now, Noah. Let's start with the NQ contract in general. When you have a pivot violation and you have a lower pivot high here on that daily chart, you're now in a neutral condition until you break below that new low pivot, because that is an equal pivot from before. So we've got 7,300, pretty much, and you've got 7,600, maybe 7,700, depends on where you're going to draw that. But we're now stuck between two pivots waiting for a catalyst. Give me a breakdown of that chart.
That's exactly it. You got support, you got resistance, you got an inside harami that this could go either way. This is one of those I'd get back to you on that because it's too neutral for me to make a call. And it's just one of those things where I could see a case building. If you start to see some candles, start to rise, but until it takes out that high, it's still stuck in that neutral range. It's below the 50, above the 200. And again, I think it's highly susceptible. Tech's probably out of all the sectors out there, tech's most susceptible to the trade talks. The NASDAQ's extremely heavy in tech, obviously.
Yeah.
So yeah, this is one of those where Twitter may end up, creating the results there. Who knows?
It's going to be interesting. Quick rundown on some of those FANG stocks. Facebook. I still see bullish opportunity if it breaks above the pivot.
Oh yeah.
So I'm interested.
Look at Facebook from a weekly perspective. It's above all the moving averages. It's above, nice little support zone. It's a textbook looking little bull pullback.
Wait a sec. Time. Pause. The whole show needs to be paused right now. Austin, if you have relief for allergies, I need you to send them to me as well. My face felt like it was exploding yesterday. My eyes were swollen, Noah. I don't know what happened, if it's hay fever here in Utah or something.
The pollen is insane, Tim. Like I went outside in my car, I left it parked out of the garage and it is covered in yellow dust.
Yeah.
So, yeah, it is pollen season. And I have hay fever. When I was a kid, I would swell up like I'd been stung by a bee.
Yeah.
So.
Yeah, and I don't usually react that way, but for whatever reason, and my wife was like, "Are you okay? Do we need to, get you some Benadryl?" And I'm like, "I'm gonna sweat this out, sweetheart. Don't worry about it. But maybe I'm gonna do Benadryl today if it comes back or whatever." I don't know what the right idea is. I don't usually get allergies. So, Cody, do you have any tips here? Maybe I'll just let Austin send me something in the clubhouse. I think that's a pretty cool tip. Weekly chart on Facebook looks great. Daily chart has a trigger confirmation. This is on the option report this week. Go and check out the full analysis as well on Facebook as there's a lot to that chart as well. I like a trigger above 190 personally. And actually Mark might have vetoed this one. He did not like that falling, riding 9 moving average. I remember. But a trigger above 190 to me is tradable. I've got that one on my watch list.
Yeah, I liked it. When we did talk about it in the report, I think we agreed on the 190. Wanted to see it clear that 20-period moving average and the old resistance pivot there.
Yep, I would agree with that. Not a lot of earnings roundup here for NASDAQ components that are alone. Let's look at some of the best performers here today. ARRY up 19.5%. Biotech company. Obviously, when you get a company moving like that, you've got to check the news. They have a cancer combo treatment. They meet their main goals. They release some of their trials data and whatnot. This is why they say biotech firms are so volatile, Noah. They're very difficult to trade in some regards, especially a company that is at the market cap of $4 billion. There's the old saying of don't do drugs. Now, can you explain that, number one? And then number two, do you subscribe to that theory?
Well, when I was a kid, Nancy Reagan just taught me to say no. And so you just say no. That's it. Just say no. Don't do drugs because you don't know the outcome. This is an interesting example, Tim. They're losing money. They've had a consistent track record of losing money on earnings. But clearly, you have enough good news out of there that you get a very volatile response. And a lot of that comes down to those types of things. One of the reasons I think they say don't do drugs is because there's so many other variables in addition to things like earnings. You've got like third phase clinical drug trial and other things like that. Mm-hmm. Yep. So absolutely.
I would agree with that. Other companies grabbing my eye on the bull side here today, you got to look at Zoom Communications. I'm not necessarily rethinking my policy on ZM. This is the mistake that they made when they had the IPO.
Just did that. Yeah.
Yep.
Look at all those people who bought that IPO.
It came back to earth, didn't it? Zoom Communications, though, is on a tear. Since the IPO. A
good-looking IPO.
Jeez, criminy. I mean, just to explain that, break that whole chart down.
Well, if Zoom is listening, because we're using Zoom right now, this is awesome. You guys are great. Look at that. One, it was definitely not overpriced and you don't have a bunch of selling on that. Reaching new highs. You see your moving averages just starting to calculate and kick in there. So you got your 9 period, you got your 20 just showing up and, continue to rise. It's channeling up at this point in time. And one of the things I think most that are hardest about trading an IPO is your technicals. You just don't have that much to work with. So you just have to pay attention. Right now, I think the price in the price lines are 80 and 90. So
yeah.
Yep, absolutely.
It's on my watch list. There's no doubt about it. And if you want to take a peek at the trade tab here real quick, it's amazing to me how liquid the options become on some of these big IPOs. You know, Zoom's now a $20 billion company, and now they don't have weeklies yet or anything like that, but they have options listed. You know, if you go to the July option, for example, or August, whenever any one of those, you'll notice the bid ask is not crazy. It's like 50, 70 cents. I mean, which for position traders would be tradable. The IPO market is really fascinating me this quarter. Last year, we had a lot of failed IPOs. We've had failed IPOs for a long time, but Zoom and Beyond Meat showing me success. There's some interesting ones as well, in my opinion.
For as new as the options are on that, I mean, the August had a little bit more volume than July's. And I'm always looking at that. And that's one of my biggest concerns with an IPO is just liquidity, you know, option spreads, things like that. You know, it's hard to borrow still, so you can't do any of the short selling. But that over time, that stuff gets sorted out. But, you know, after a couple of weeks, months, then you've got something that you can really trade.
Yep. BYND, while we're bringing it up, Majin has a great question. And by the way, if you're out here with us here today, I'm going to slow down and say thank you very much for being here. Hashtag Team Tackle and our halftime crew. We love doing this. If you already love our channel and you subscribe and you've clicked the bell, fantastic. If you're new to YouTube or if you're new to our channel, there's a subscribe button right underneath. Go ahead and click that right now. Make sure you get alerted of new shows when they come out. And then there's a bell next to it. You want to make sure you click that bell. And at 23 thumbs up, I think my audience knows what I'm going to ask them right now, and that is to give me a quick thumbs up. Let's at least hit a 50% fib number on that one here, Noah. BYND, 3 red candles coming back down here, down about, what, 7-8% here today. This is just price action, guys. I don't really think anything happened on the upside or the downside, but volatility. I mean, they're moving, Noah. The ATR on this, you couldn't even measure it, but what's the range of the candle today, for example?
10 points.
10 points on an $80, $90 stock. It's moving 8 to 10% a day. Now, that's on the upside and the downside. You had red candle, red candle, red candle pivot. It ran from 70 to almost $100, 96.78 there. It in 4 days, you know, $27 in price movement in 4 days on that price is like 40%. Now you've got a pullback developing. Noah, can you trade this price action? I know you can, but what advice would you give the crew out there?
I can, but I don't on this type of stuff, just because same type of thing. I'd look at the options coming in. Yes, they've got options. You look at like July, August options. You got a couple hundred in open interest. Your bid ask spreads they're 40 cents, so it's getting more tradable. Mm-hmm. But you know, I like to be patient with the IPOs, just because you know you're getting a lot of emotional knee-jerk reaction, and I think for the most part you get a lot of novice speculators coming in on IPOs because they get excited about it. Maybe they're somebody who's never traded before, and you know you look at like Uber and Lyft is a good example for that. Mm-hmm. They go in, they buy, and then you know there's just a lot of speculation going on in there. And I like to wait for the dust to settle and for a personality to emerge. So I understand the stock's personality a little bit more clearly. Depends on how much money you're talking about. You know, might I speculate with like a small options contract or something like that? Sure. But it's speculative money only.
Yeah. Yeah, I would agree with that. And Beyond is the top loser.
You want to really get to know your stocks before.
I want to know them. I want to take them out to dinner, you know, spend some time talking with them.
Speculation's like the first date maybe, but you're not going to, you know, do a big investment on them just.
Yeah, I'm not going to go in you know, invest long term with the stock I just met for sure.
Listen, I'm the king of loving awkward moments. I have no idea where this is going to go, but I would love to sit back.
I think both Cody and I are actually blushing quite a bit. Look how red his face is. Now he lives in Hawaii. Maybe it's just the sun.
That's just a beautiful tan here.
All right.
Moving on to the RTY Russell 2000 contract, and you know, obviously small caps, they're going to have different implications here. This is more of a neutral chart, a little bit of a bounce back candle here today, bringing it back into the middle of the range. Now, give me a weekly and a daily here, because we've got a lot of cash flow condors traders out there. And in the chat here, guys, to put in the words cash flow cash flow. And it's important to understand the reason why we watch the Russell and what we're doing with the Russell. A lot of our traders are trading that iron condor system. Noah, what's your read on this chart? It's neutral to me, but there's some subtlety there I think needs to be broken down. Give me an analysis if you would.
Well, weekly time frame here, it's definitely range bound between, last support, last resistance, and you got some congestion with those moving averages. So I would stick with that neutral. And again, it looks like it's 15 and 1600 ballparks, roughly speaking. Getting on the daily chart, the first thing I notice on the daily chart is that the price action is below all the moving averages. But it's still above 1500, which is a big support zone. So I'm more neutral, coming off of the bottom of that, even though it's below the moving averages. 1500 is a huge number for this. And I think any upward movement off of that's a sign of strength. Not as subject to things of, trade wars and whatnot, but certainly subjected to like general economic news and general U.S. reports, GDP strength, consumer confidence, and things of that nature. So pretty neutral. I think it's kind of ideal for the condors right now.
Yeah. The summer is for theta, and yeah, you've got to trade your system out there. There's no question about it. Give me a quick peek at some of these charts, grabbing my eye at this size or around the mid cap size. Yeti, YETI, company that's on my watch list. I watch it all the time. I trade it. I'm interested in it. Broken below moving averages. Now you've got this chart violation here, Noah, but you like a company. How do you approach a situation like that?
This is a good question, Tim. Deeper pullback into a $25 known support zone. And I just have this strange urge. I want to draw a fib on it. I feel this incredible urge to draw a fib on it.
Go ahead. So, 12 to 36, or do you do it from the previous pivot? See, this is my problem.
I'm going to go pivot to pivot, right, from the low to the high, because that's the most important Fibonacci right now.
Sure.
50% retracement. That's magic number, Tim. That's the magic number that whispers into your ear you must buy. Unless it goes down to 61.8%, then you were wrong. Draw enough lines on a chart, you'll hit something. But you'll notice how well it behaved. It hit the 38.2. It came down to the 50. It's relatively well behaved. It's got a slowing momentum pattern. I'd like to see it back up above the 9. And then if you're really patient, wait till it clears 30.
Yeah.
That really is good. Like you even see on the way up every time. On the way up, hit the 50. On the way up, hit 23.6.
That's a good sign of algos.
That it is.
Fine, Cody. I'll watch your documentary. Okay. I will. It's fine. Some charts not so good here, but actually maybe you'll like the pullback. Cody, one of your stocks that you brought up a lot in the past, Planet Fitness. We're talking about a $7 billion mid-cap size company, kind of in the style of what we're looking at right now. Nice little retracement here, not sensitive to the China news, but it is down 2.6% today.
This is setting up for another buying opportunity. I like this one as a long-term, I like the company, I like their model. And so any dips I've been getting, I've been buying. When the market was down, this was still moving up. And so now that it's, give me a doji and a trigger, and I'm buying more.
Needs a doji. Had a small uptick on the selling pressure on the volume. Some downward momentum here near the lows. But when that comes to the bottom of the channel, I think there's a buy opportunity there.
Is Rite Aid shortable here? Look at RAD. They had this is more I've talked about Rite Aid than in my whole life. I will tell you that. But they had an inverse split recently, and now it's popping up on all my scans because it used to not hit them at all. You've got a bear retracement developing, red candle in a deep long-term downtrend. And look at the split, Noah, 1 to 20 reverse split. Why would they do that? I don't know.
Optics, so that the stock doesn't look like it's in, super.
But it lets short sellers, I'll give you the optic. Okay, now I'm a short seller. I'm like, okay, now I can short it. Okay.
Hell yeah.
I don't know if it's
maybe somebody's just motivated for that. Like, we're going out of business. Let's make some money.
20% short float, Noah.
Well, I'll tell you what. The Rite Aid by my house did close down, and I like the ticker symbol. It's rad. And I like it for short selling. That is a good looking short selling chart. Now, again, that reverse split's interesting. That really is interesting. I I would like to get into the head of the people who put that together and understand why.
Yeah, me too. Move on to the dollar, if you would. Let's break down the currency market and start with this one. Oh, Cody, you got ticked out of a euro dollar cross trade today on a stop loss. So that literally hit the exact pip that you were talking about. That's always brutal.
Yeah, I think it was one pip above where I had my stop. So it literally jumped up, ticked me out, went back, and it was just like, and you're done. I'm like,
it makes you believe in conspiracy, first of all.
It makes you think
dark pools and
like it went right at my stop.
So wait, are you guys suggesting that men conspire? People conspire in general? Interesting.
Well, and now we have like smart learning and algorithms and automated stuff that is learning on its own, Noah. So maybe they're conspiring. The computers will conspire against us, and they will find your stop loss. $DXY is in an uptrend, pressing up against resistance. It's been really strong. You've got a Fed minutes tomorrow.
Yeah.
I don't know if that's going to have a big impact. It's not usually a big currency mover, but it is the Fed. Whenever the Fed has something to say, you're going to pay attention. Give me a read on the dollar.
It's showing strength. What I'm seeing across the board on the currencies is, and I think the news that it's affecting it more is not so much the news out of the dollar in the US, it's monetary policy out of other places. I read an article last night about how addicted a lot of those places in Europe are to the negative interest rates. And I think Euro is going to go negative eventually here. Mm-hmm. And then I think I'm seeing a lot of negative news out of Australia with their economic slowdown, their housing market slowing down. They're talking about stimulating. And I think that'll send their currency lower, and the dollar is going to just kind of march to its own drum.
Give me the dollar yen cross pair for a bit. And I've got to make a big shout out to my friend Ken, who I mentored over the years. Still got a great relationship with Ken. And Ken sent me an email after the yen announced their GDP numbers the other day. And I had to go look it up, by the way, because it didn't hit my filter at first. And so I started adding all my filters, trying to figure out where is this data. They had it as a yellow impact data, and their preliminary GDP came out at 0.5%. And I will not read this verbatim because there's a few words I cannot say on the air. But Ken, who's an expert on Japanese economics, said that is garbage. That Abe is literally forcing people into retirement, that Japan has problems economically. Their negative interest rate is sustaining itself for a reason because they're trying to kill savers, and they've got GDP problems in that country. Dollar rallying, yen weak right here, Noah. I know it's been a neutral chart, and the yen has traditionally been a safe haven for a long time, but I'm going to go dig into some of those economic things that Ken talked about. Give me a quick read on the chart, though.
Yeah, nice rally, but I don't trust it. It's down below most of those moving averages. Japan, like a lot of other places, has a major demographic problem. It's not just an economic problem. They got a demographic problem. They got an aging population and a negative birth rate. And, over time that just grinds an economy to a halt because you've got a huge burden on the workforce. Mm-hmm. And the taxes and then all the pensions and everything else just come to bear. And that's true across the world. It's not just Japan, but, economic data, short-term economic data does not a trend make.
Well, and then the dollar yen cross pair here. I mean, that is your most popular trade in the world. It's the carry trade, right? And you've got safe haven in the dollar, negative interest rate out of the yen. A lot of people are probably picking up dollars and shorting yen to pick up that carry swap. If you're a Forex trader, you know what I'm talking about. If you're not a Forex trader, put in Forex report in the chat. We do a pro report each and every week to teach you guys how to learn Forex and what to do with those markets. Looking across the other Forex pairs, not a lot there. Let's go on to commodities and let's talk about crude oil. Hanging around, will not break up or down. It is now stuck in this neutral range, but there's a subtle difference between where it is now and where it was a couple of weeks ago. Biggest commodity in the world here, Noah. Weekly chart, daily chart, intraday. Give me a full analysis here.
Well, it's up above all the moving averages, which I think is a nice, strong sign for it after the deeper pullback. It's you see again a little uptick on the volume on the downward movement, and on the rally you're seeing a little bit of a tapering on the volume. I'm pretty neutral on it, Tim. Even though it's above moving averages, I might have a slightly bullish bias, but my bias on energy peaks in the summer. Yeah, I'm not bullish past July, and so that's just a seasonal expectation. Doesn't mean this year is going to follow suit. But typically you see strong rally in the early months of the year from like January through May, June. And then after that, July, it tends to taper off for the rest of the year.
Mm-hmm.
But that is, I keep reading, information about production reports. And of course, there's a lot of talk about Iran, the Middle East, which may be nothing at the end of the day. But those things could alter the outcome for sure.
Yeah, I agree with that. Break down the other, commodities here as we go through the market. And it's always good to kind of look at these ones. Gold sitting on support.
Gold is coming. Let me get that chart up. That is support.
It is just sitting on support. Long-term support, intermediate support, short-term, there's been some weakness. It's down. It's red 5 candles in a row. Let's not think that part of it as well. Silver in a downtrend, platinum pressing lower, copper breaking down, palladium weak as well. Strong dollar and international, trade concerns. It's had pressure on the metals markets here, Noah. There's no doubt about it. From one to the next, they're all kind of fading, or selling in general. Give me a read on general on metals.
Well, across the board, you're definitely seeing selling pressure, and I think some of that has to do with tariffs on that. But otherwise, I think it's just demand, strength of the dollar. You're just seeing gold and silver taking on the chin a little bit, and then the other precious metals, which have different uses, take a little hit. I did see something on China's big, ace in the hole is the rare earth metals. And that, I don't know that those fall in the exact same index, but there's certainly, some downward pressure on that. I'm watching that support zone on gold. I think it might end up ultimately being a buying opportunity for physical, not necessarily the paper assets. But it's nice to pay for the physical when you trade the paper.
I'm not going to call you out on this, but how big is the rare earth metals market? I don't know. It can't be that.
Do you have a phone with lithium in it?
Correct.
Yeah, it's important. They're hard to find. That's why they're called rare earth metals. It's not a huge market, but it's really tech has a lot. It's really important for tech.
You know who the U.S. is getting a corner on? The crude oil market, because our production numbers are as high as they've ever been, and we're actually pushing out a lot. I get it. No, I have to think about that one, no, and kind of look. I actually Googled it. I'm going to look at some of that rare earth stuff after and see, kind of what the exposure is there. But the metals market definitely down here. Move on to Bitcoin, if you will. Bitcoin, 79.37, 79.65. It's moving, it's hanging. It will not sell yet, but volatility is going to be hitting this market at some point. I do not expect a 4-month sideways trend at 8,000 after this parabolic move here, Noah. It's starting to get more interesting. Do you have people in your life starting to talk about it more?
I've seen a lot more people talking about it on social media. And it is right. I think 8,000 is a big price level for it. And I think that little candle down, that little big candle down, that huge candle down clears out a lot of the selling pressure. So I think people are still rightly skeptical, but once it gets back above 8,000, they're talking about the 6,000 mark and then the 7,000 mark. 8,000 gives me a much more, full blown reversal look.
Yeah, I agree with that. And then we're going to do a full analysis on WWE here today. But before we do, I've got to talk about Tesla. Did you see this news on Tesla?
I didn't see the news, but I saw the chart.
Man, an analyst out of JP Morgan. So I didn't even know that all the analysts did this, but they have a $230 price target, but they have a worst case scenario price target, and they lowered it from 97 to 10. That if the company went through further pressure,
$10,
$10 a share. Now, their price target's 230, Noah, that the company's going to, remain solvent and all that kind of stuff. But if their bond obligations and their debt obligations, and I got to tell you, everybody who trades Tesla, you have a huge fight developing in this company pretty much every single day. That chart is fascinating to me. Give me a breakdown, if you would.
Well, in full disclosure, I'm currently got a bearish position on Tesla, and I'm rooting for it to go down. It is definitely got a lot of downward momentum. You're seeing an uptick in the selling volume, particularly on the gap, and 200 is a big number. And you back that out and you look at it on a weekly time frame. the big number 250 broke, and then 200 is just a big fat number, but it's not a huge technical number. Let me get a little more history in here. Let's see if we can get that back to, well, let's go 10 years so we get it all. 200 has got some old support congestion around it. And so it is a big number. It's just a fat number, and it's overextended down into 200. And I wouldn't be surprised to see a rally out of this.
Mm-hmm.
But a lot of good downward momentum, and I don't like to counter trend trade. And so from my perspective, it's in the bearish downtrend.
So if you're bearish, I mean, and you're in a position right now, I mean, obviously you're still kind of watching it because you got a couple hours in the day. It might be a swinger position trade. But how do you teach people to think about where you should be profit taking or rolling stops or whatnot? Because I know you're probably doing
this is one where I'm already considering the profit take on this one, just because it is down. I haven't closed the position yet, because it hasn't. I've adjusted it a little bit so it's more neutral. But profit taking would be wise, I think, at that number. But I also wouldn't mind leaving a little because of the downward momentum increase. It did just do a little increase in momentum to the downside, Tim, where it dropped hard. And I think whatever retracement you get here probably ends up retesting, maybe going lower. But anytime you hit big fat numbers, like a 200, that's a big zip code for it. So I think profit taking would be smart.
Yeah.
I might have just talked myself into closing my trade. I'm not sure.
Well, I mean, trade your plan. There's no doubt about it. All right, let's talk about WWE, and it is Delta Tuesday. And one thing I got to tell you guys, I love what we're doing at Tackle Trading, and I hope that you guys do as well. We're building pro and premium content for you guys, and we put a lot of our effort and our work in on the back end to make sure that you get the value out of those pro memberships. And it was a very subtle change last week, Noah, but I think it was a huge change to the way we deliver the Coaches Show. Last week, you started a new formatting for the Coaches Show, where you used a PowerPoint during about 20, 30 minutes of the show. You taught the concept, education delivery in that style, and then you went and applied it through some case studies and examples. Now, today, you're going to be doing that tonight with shorting stock. Last week was long stock. This week was short stock. And I found a candidate from our option report, which is WWE. Break this chart down and kind of explain the difference between selling a stock short and buying a long put, if you would.
You bet. Well, what we like about WWE is it just recently, you gotta throw in some WWE talk. Like, it just broke down below the 200 moving average. That's pretty exciting, right? Okay. Yeah, it's awesome. I hope I didn't blow anybody's ears out. Woo! Yeah. You're going down, brother. It's going down. So
if I try, I'll sound like Alex Jones. I can't do it. Maybe later. Go ahead.
I got to admit, I saw some WWE last night. It made me laugh. Took me back to my childhood. So it's trading down. I think you got an opportunity. One thing I'm watching for on this one is this old support resistance zone back in here. It's below the moving averages. I'd like to see it break that. And so it just needs to take out the last little low. And you're down below that zone. When you're short selling a stock, one of the things that I've been thinking about a lot lately, Tim, is just how good of an instrument stock is for trading. In the lounge this morning, we brought up one of the first traders I ever read a good book from was Dr. Alexander Elder. And he just trades stock. He's not an options trader. And I know quite a few traders who that's all they do. They don't really do options. They just do stock. And there's this beautiful simplicity of stock trading. What you see is what you get. You don't have to think about, volatility. You don't have to think about time decay. You just have to think about direction. And it's not just good for beginners. It could be good for seasoned veterans who might maybe chasing the dragon a little bit with their options sometimes if they haven't found their discipline. Swing trading stock's not hard. Set your stop, set your target, set it, forget it. When you're borrowing stock to sell it short, they typically are going to hold about a 50% margin. So, and that's what you're doing when you're selling short. You're borrowing shares and you're creating a negative position. You're selling it. So when you go look at the trade tab, one of the things you want to look for is up here, it says ETB. That means easy to borrow. If you see that in red with an HTB, that means it's hard to borrow, which means they don't have it available. And when you open up a position, you're creating a negative posture. You're actually selling shares you don't own, and you're going to get paid a credit for placing that trade. Now, when you're buying a put, by contrast, a put gives you the right to sell. And if you don't own the stock, that ends up being the right to sell it short. So you have the right to sell the stock versus actually just borrowing it and selling it. And again, the options will require, less capital per se. But you'll also have to think about which strike price, which expiration date, and what volatility might do. And usually for put options, volatility is, helpful for it. But short selling stocks really, really simple. And I actually really like it because once stocks start going down, you get really good, downward movement in a price chart. Down can happen really fast. And you look back at the last meltdown, and where it is right now, I'd say is kind of equivalent to what you're seeing right here. There's still some downward movement left, I think, in this based off of what I'm seeing here. A lot of room for that to drop. So borrowing the shares, you guys are going to have to come for sure to the coaches show tonight because we're going to do a deep dive on short selling and how to structure and plan those trades.
Yeah. I mean, the thing about it is selling short, and there is some confusion, I believe, between the stock and the options report. And there's no reason why you can't take a candidate from the option report and sell it short, right?
Yeah, absolutely. A lot of the reasons the stocks wind up on the scouting report, the stock report versus the option report comes down to the price of the tag of the stock.
Price or liquidity is pretty much it.
Price or liquidity and whether or not the options are tradable. And so, sometimes it's just price tag. Sometimes the more expensive stocks just wind up on the options report just because they're expensive.
Well, and that's the thing. If you're out there and you're a pro member of our content and you're in our community, the stock report doesn't say you have to trade stock. You can check the options and see if they fit your rules. And the option report doesn't say you have to trade it one way or the other. It just means that we've bird dogged that candidate. We put it through our process. We evaluate it and it fit all of our rules.
I'm liking this chart though.
Yeah, I like it. There's some good bull. There's some good bear. There's a bunch of stuff across the market. There's no doubt about it. Roundup on earnings tomorrow. Target, quick peek here. Last couple of charts, then we're going to wrap this thing up. If you are a Target trader or if you are trading brick and mortar retail, be aware the big giant has earnings tomorrow, TGT. Market maker expectation. We've seen these all over the board, but a lot of these have been down, Noah. If you look at the MMM move, 3.7, it's about in line, 5%. 5% seems about right. Lowe's has earnings. Advanced Auto Parts has earnings. Analog Devices has earnings. That's all tomorrow before the bell. Today after, Nordstrom, JWN, has earnings. Got a few interesting ones. A lot of retail companies. Best Buy later in the week. Some other stocks triggering from the reports. We've got TSCO, AEP, BX, and PEG. Go get all of the analysis on how we broke those charts down. I like that Tractor Supply chart there, Noah. It's looking great.
It is a good looking chart. And I think it was one of my favorite setups from the week. The confirmation up today. You're not too late if you're interested in it. You might wait for the breakout at this point in time, but I like that. It's got a few candles up off of the rising 50-period moving average. That's a killer setup.
Very good. All right, my friend. We will see everybody in the coaches show tonight. In fact, in the chat, put in coaches show tonight. Join Noah, and I believe, if I'm not mistaken, is it Coach Emily with you, Noah?
It is Coach Emily. And we've got an amazing chemistry and dynamic, so we're going to have a lot of fun.
Yeah, very good. Emily and Noah will be there tonight to talk about shorting stock and the markets, and we'll break down all that value as we go. Podcast just dropped this week, but the one thing I was going to promote here today, if anything, Noah, was the blog you were talking about from Christian. And I thought that Tackle Today blog was just really, really great today. And I love the message. If you guys read our blog, great. If you're getting the email every day, great. If you want to be put on our email list and make sure you get our daily emails, email team@tackletrading.com. But go check out the Tackle Today blog, either on our Medium channel or on our website. I think you guys will enjoy that read here today. Young man Cody, we got tomorrow. We got a whole week of different coaches, right?
We do. We have a different coach every week this week. So different insights, different trading strategies. Looking forward to it.
And by the way, nobody's asked me the question, where's Matt? Somebody should be asking me, where is Matt? Right?
They're not terribly worried about Matt.
No, I'm sure they are wondering where he is. Matt is working on our next premium system launch, and everybody, you know, we're going to have a lot more information as we go about that. We're very excited about it. Matt is the architect, and he's going to be doing the PowerPoints and the videos for our premium system that we're putting out on June 5th. And so I forced him. I said, Matt wanted to come every day this week, Noah. I said, you don't have the option. You're out of the halftime report this week. We need you to finish those videos, and then we'll see you back here next week. But it's really cool. It's called the STEP system. In the chat, type in STEP system, and we'll be giving you more information about that as we go. That's where Matt is. And we'll see you guys back here tomorrow. Noah, great job today. Cody, great job as always. Yeah, let's wrap this thing. We're out, guys.